My name is Robyn Siegel, and welcome to the Mortgage Minute. Today, we're going to show you 5 things that can kill your credit score without you even knowing it. Let me give you just a little bit of backstory before we get started on that. A credit score, also known as a FICO score, is a number that's assigned to your credit profile. That number is between 450 and 850. 850 being the best. An acceptable credit score, typically for most lenders, is anything over 640. So that's really where you want to be. These days, you need a good credit score to borrow money, rent an apartment, get a job, get insurance, and even open up a checking account at the bank. So, how do people mess up their credit? Let's get into it now. I picked 5 credit killers that would be the worst things you could do. First, do you have any judgments, liens, collection accounts? Whether you know that you have them or whether it's a big surprise, they'll have the same effect. And this is probably the worst thing that you can do. A tax lien, a medical judgment from years ago that you never took care of. Did you default on a student loan, right? Did you not pay a Visa or a MasterCard and just let it go? They probably have already sold it to a credit collection company and they're in the process of getting a judgment against you. All this stuff is even worse than having a recent bankruptcy or foreclosure, because there you no longer owe the money. You no longer have the credit, and you also have an opportunity to reestablish your credit afterwards because you don't owe the money, right? But understand this, old bad credit does not have the same effect on your credit score as new bad credit. The older credit is, the less of an effect it'll have on your score. So, if you had a judgment, let's say from 5 years ago, that you've completely ignored, it might be smarter to keep ignoring it unless the bank or lender that you're trying to get credit from requires you to pay it off. Depends on the lender and what your use of credit is. The worst thing you can do before you even apply for a mortgage or a loan or something is call up an old creditor and say, hey, I know I haven't paid you for 5 years, but can we create this little payment plan? I'll give you $100 a month. So what you're doing is you're reestablishing an old bad credit account into a new bad credit account. You don't want to do that. You never want to do that. Leave it alone. Number 2, pay your bills on time. Even if you pay the minimum amount, okay? They ask for $25, pay the $25. If you can't even make the $25, call them up and ask them if you can pay $20, as long as you're paying something within the 30-day period. Late to me means 30 days because it gets reported on your credit report, not after the grace period, which of course you'll have to pay a late payment. Number 3, worst thing you can possibly do is bang up your credit cards to whatever the max is allowed or over. The algorithm that they use to calculate your score does not look kindly on people that have maxed out their credit cards. Never go to the max, never go close to the max. The best number to remember is 50%. Stay below half of what the amount allowed is. You use that one credit card up to 50%, move on to a second one, all right? And of course, this just goes for credit cards, not mortgages, not car loans, because obviously that is what it is, all right? Number 4, do not take out new credit unless you positively need it. You need a car loan, you need a car lease, all right? You don't need a store credit card to get that 10% off at the register. And that's what they'll try to do. They'll try to entice you to take out a new credit card by offering you 10% off your first purchase or whatever. Unnecessary new credit can kill your score for 2 reasons. A, it is a new account without any established history. Remember, we like to see 24 months. B, there will be an inquiry on your credit, which can lower your score. An inquiry, which brings me to number 5, is when you shop around and apply for new credit and the lender runs a credit check on you. That's an inquiry, all right? If the lender runs an inquiry on you and they say, okay, we've established credit. If they do a credit check and it doesn't result in a corresponding credit line, what the algorithm or computer reads is that they did a credit check on you, they rejected you. Because if they don't see an inquiry, new credit, all right, that means you've gotten rejected. It might just lower your score just a little bit, but it might lower your score to the point where A, you get rejected, or B, they'll say that they'll give you the loan or the credit card or whatever, but your interest rate is going to be higher. So keep your credit inquiries to a minimum. When shopping around for a new car, a boat, a house, never let anybody run your credit until you are sure you want to do business with them. And that's another reason not to fall for, do you want to open up a new credit card to buy these candlesticks and we'll give you 10% off, all right? So those are the 5 worst things you could do to kill your own credit. Thank you again. This is Robyn Siegel for the Mortgage Minute.